Welcome to a Forex Foley analysis. Today is Tuesday, April 26th. It is currently 11:30 a.m. Eastern Standard Time, and I'm just going to be doing a quick trade ideas update and kind of a recap of New York session today, what happened to begin the day, and my outlook for the rest of the week. So, kind of to recap what I've went over last video yesterday on my trade ideas. We're still seeing equity weakness overall across board, again with the hawkish central bank view from the post-IMF meeting, which was last Thursday. We're still seeing market volume and volatility being relatively healthy from the IMF meeting as we continue to dig deeper into Q2. Again, with the continued various fundamental catalysts, whether that's inflation, the supply chain issues, and the previous issues that I noted last video. And we are still expecting this volume to hold weight, whether like for the rest of the month and going into May. So that's very good for us scalpers and even for day traders as well. If you're holding positions throughout the day or whatever, obviously healthy volume is going to help everyone in the markets. I just wanted to make a point as well on the Bank of Canada statements yesterday from the head of Bank of Canada, Malcolm. He says we will not be ruling out increasing interest rates more than 50 basis points, which that's actually very interesting. So we're going to have to kind of keep an eye on that because we did see these Bank of Canada statements yesterday actually impact or hold a somewhat of weight within even equities and, of course, commodities because the Canadian dollar is heavily tied to oil. But I just wanted to mention that, me being from Canada, I found that interesting. And again, global equities across the board are still relatively bearish. Again, this was due to the IMF meeting from Thursday, as we do see US30 on the 1 minute has been continued downtrend. The UK 100, I don't have my PPLs marked up for this, but as you can see, it's kind of exactly like US30. It's been on a downtrend. And as well, even if we go as far as the Australia 200, that has been on a downtrend as well, right? So equities across board just have been very, very bearish since the IMF meeting. And we are seeing a continued outflow on liquidity, which, again, this is due to the inevitable rate hikes from the Fed, which, again, so that would be the U.S. Central Bank as well as the Canadian Central Bank. So North America, there's going to be continued rate hikes for both central banks. Again, Europe as well. The global market, just a lot of rate hikes due to COVID and now inflation issues, right? We can see a potential for US30 to dig deeper into current higher time frame lows, which I'm going to highlight right now. So, let me fix this. So the lows that I did highlight in not my last video, I think it was my first or second video, were the lows at 32,400, higher time frame, right? So this range right here, 32,800 to 32,200, that was the lows, but that range is the current higher time frame lows. And I do see a potential for price to dig deeper. As you can see, even on the 4 hour here, it's almost digging down. We're about 1,000 to 1,200 points until that low, and it's digging down by the day, as we can see, right? 4 hour from the current highs have absolutely melted from the highs at 35,500 from last week, completely melted from that price point. Again, this was before the IMF meeting, so since the IMF meeting we have melted from there. But that was the current highs, and I do see a potential for us to dig deeper into these lows at 32,200 to 32,800 price range. So mentioning that, now I'm just going to kind of go over the aggressive bounce we saw yesterday in price. So let me clear this here and pull up my key levels. So yesterday, April 25th, right? Yesterday we saw an aggressive bounce from the lows that were clocked in. So actually I'll go to the daily, sorry. Let me break it down from the daily here just to show you the price range we were in yesterday. So yesterday we peaked highs at 34,100. That was from the aggressive bounce, but the lows that we saw yesterday were at about 33,200, 33,300, that area. And actually, the exact lows were about 33,350, around that area, but we'll say 33,300. That was the lows of yesterday. So we were about 1,000-point range yesterday was the daily candle. Pretty insane, right? And today, from these highs at around 34,100, we've completely melted for the daily candle today. But let me just zoom into the lower time frames to highlight and show you guys the price action that I'm talking about here. So yeah, on the 30-minute from yesterday, right? So this is the lows that were clocked in yesterday at 33,300, right? And from there, we saw this aggressive bounce about right to here, 34,100, and this was about a 800-point move, but we'll say 1,000-point move in the daily, right? And then come Asian Open yesterday, we were just kind of ranging going into London session, and then from New York Open till now, we have saw about a 600-point melt, where we're now coming down to the key level of 33,500, which we're testing right now, actually, which we're going to see reactions. So that's kind of the lower time frame structure, and obviously 34,100 holding a very heavy resistance right now for price, which was from the bounce yesterday. Again, right here. Right, so yeah, that was the aggressive bounce, and we did see that rejection from 34,100. And although we did see this aggressive bounce yesterday from the dip of 33,300, the bearish price action and lower time frame bearish sentiment is still very much intact. We don't want to get caught up in any fake outs or short-lived pullbacks, as again, this was literally a short-lived pullback yesterday. And we don't want to get caught up in that because, again, our outlook and sentiment is still bearish for lower time frame currently. So, yeah, and again, we've almost engulfed that pullback from yesterday, as we're now literally testing 35,500 key level. So, yeah, and the pullback, the bullish pullback and bounce from yesterday, it was a minor pullback, but it was from sellers liquidating their positions, taking some profits. And again, we know how greedy buyers are. They're just trying to kind of save as much as possible and squeeze out as much profit as they possibly can when they're looking for buys. But as long as the current fear, uncertainty, and doubt and the bearish lower time frame structure is still intact, with the rate hikes being further priced in, obviously, for the past, I'd say, a month or two, honestly, for all of 2022, but for the past month or two, it's been majority of the talks with FOMC and any Fed speakers. When they come to talk, it's always about the rate hikes. We have saw rate hike increases throughout the past couple weeks, and further talks for more rate hike increases, right? So we just have to be aware of that. And we were looking for sells. So from this pullback, honestly, I was expecting a pullback to 34,300, which we didn't get around this area here. We didn't get that. We actually completely rejected around 34,200, 34,100, and came down. But we were calling sells below 34,00, 34,800, and now 34,600 PPLs as we come to test 34,500 key level. Now we're going to have to monitor current reactions at this key level of 33,500. If we do break below, I can see us coming all the way down to 33,200, which was yesterday's lows, or sorry, 33,300, which was yesterday's lows. So we could see price action of something like this: break below, retest, fail to break, and just keep coming down, right? All the way to yesterday's lows of 33,300. But we're going to have to just monitor that, and I will be doing an update, again, either later tonight or tomorrow before New York session, just on price action and just an update on trade ideas going into the rest of the week. But yeah, that's safest sells right now are going to obviously be below price action of 33,500. So if you can get your price action confirms on however you take trades below 33,500, I would personally be looking for sells. I'm honestly done for the day. I made a little bit of profit off of sells below 33,800 today, but yeah, that was kind of the recap on today. I hope you could take something away from that. Any feedback is greatly appreciated. Please like, comment, subscribe. Thank you, and I'll be back.